Good afternoon. For those of you who are here already, we're going to give it another minute or two. As my clock shows, we're just hitting 3 o'clock. And there's oftentimes a few stragglers. So let's give it a minute or two and we'll get rolling. All right. Good afternoon. My name is Chris Bolter. I'm the CEO of Val-Chris Investments, and I am very grateful that you've decided to spend a few minutes of your busy day and joining us to talk about a new product that we're going to introduce today, and that's a low-rate private money first trustee. But before we do that, I just wanted to go over a little background about us. This is kind of our agenda. We'll talk about the product, talk a little bit about some of the other things we do to start with, and then we'll get down to the introduction of a low-rate California First Trustee, and then provide you some time for any questions and any answers I can provide. And our objective will be to get you in and out of here in about 30 minutes. So this first page here kind of gives you an overview of our company. We were founded in 1975. I've been the broker of record since 1986. So this is all we've done is private money lending. We haven't done subprime or non-QM or any type of conventional financing. We focus strictly on private money or hard money loans. We fund with all of our own money. All the underwriting is done in the office, primarily by myself. The benefit to you is having one underwriter in an office rather than a committee. When we give you pricing and we tell you your loan approved, you're not having to worry about it being reviewed and possibly second guessed by another party or another committee. The types of products that we do, we're not just a first trustee lender, we're not just a residential lender. The key elements for us is that the loan is being used primarily for a business or investment purpose. Oops, here we go. If it's secured by a residential property. If the loan's secured by anything other than a residential 1 to 4 unit property, the purpose isn't going to be extremely relevant to us as it is when it's secured by 1 to 4 units. We originate first trustees along with second trustees, third trustees, and we've even done a few fourth trustees from time to time. Properties can be owner occupied, they can be non-owner occupied. We do a lot of refinances on a borrower's primary residence where the purpose of the loan is being used primarily for a business or investment purpose. And for us, when we look at the primary purpose, that means 51% or more of the loan amount is being used for a business or investment purpose. The rest can be used for consumer purposes. And that may even mean bringing the existing mortgages current on their primary residence, as long as they meet the primary 51% or more for business or investment purpose. Purchases, we do purchases for non-owner and owner-occupied properties. Now, for an owner-occupied purchase to meet our business or investment guideline rather than a consumer purpose loan, it needs to be purchased in the name of an LLC or corporation. So if you've got a buyer who owns a business or owns an LLC and wants to buy a property as a primary residence, I can still help you if they can take title that way and it's an existing LLC or corporation. All of our loans are stated income stated assets, so you never have to worry about a DTI requirement or a DSCR requirement on an income property. We don't require W-2s, bank statements, tax returns, verification of income of any type. We don't have any minimum FICO scores, so there's no FICO score cutoff. In fact, some of our borrowers have no FICO scores, which is common when we're dealing with foreign nationals. Um, and we can close on short sales and REO transactions that may be very timely and need to close quickly. Get to our next slide. Okay, this is just a quick overview for you. You'll want to save this page. It gives you a description of the 9 states we lend in. Whether or not you have to be licensed to earn a commission on that particular loan or not. It describes whether we do owner or non-owner, what states we offer second trust deeds, and what is most commonly the maximum loan to value we offer in each of these 9 states. Again, the products offered. As I mentioned, we do first trust deeds, second trust deeds, third trust deeds. We do purchases, we do refinances. These can be rate and term refinances if we're paying off a business or investment purpose loan. They can be cash out refinances. If there's not enough equity in one particular property to get the borrower the cash out they would like, we can cross collateralize. I've done loans cross collateralizing not only just 2 properties, but I've done cross collateralization of up to 4 to 5 properties if needed to meet the loan objectives of the borrower. We offer true bridge loans. Now, that is the one consumer purpose loan that we do originate. And for us, a true bridge loan is when a borrower is taking out cash on an existing property, that's their primary residence, to buy a new property. That oftentimes comes up when there's a time crunch in closing on the new purchase and they haven't yet closed on their existing home. We can help you with that. We make loans to foreign nationals. We will secure loans on mobile homes and manufactured homes. They need to be permanently affixed to the foundation, but we will make loans on those types of properties. We can make loans with properties in bankruptcy. We will require a dismissal or a discharge before the loan closes, but just because a borrower is in bankruptcy or even in foreclosure doesn't mean we can't help. And we do loans for properties that are in probate. In those particular cases, we oftentimes have the administrator of the estate pulling out cash, possibly to upgrade a property, to prepare it for rental or for resale. We can help with those. And then lastly, we do every type of property out there. The only type of loan we don't originate are construction loans from the ground up. How do you get paid? What to expect after submitting a loan? All of our fees are going to be disclosed on the closing statement, of course, and we provide you with documentation up front before you go to your client, telling you exactly what our fees are going to be, and there are going to be no surprises on our end. Your broker fees are going to be listed on the loan documentation as a broker fee. Our fees are going to be loan origination fees, and that's how they're going to be disclosed to your client. You never have to guess or wonder what the fees are going to be. They're fully disclosed, and your client will be able to be fully aware of what their costs and fees are going to be. Our typical fees, they're typically 1 to 3 points. Most commonly, you're going to find 2 to 3 points, but we can do loans for as little as 1 point by upping interest rates or extending prepayment penalties. So we have ways to extend a lower fee if a borrower is willing to pay a higher rate or a longer prepayment period. Typical closing time is 10 business days, but I look at that from the time you get us a complete package. So it's not 10 days from you getting us 1 page of a disclosure or 1 page of a submission package. That's getting us the entire package. Once again, the borrower is your client. We are not going to be contacting your borrower other than a pre-funding call, which takes place typically the day before funding. They're your client. We are your lender. We protect you as a broker. If a loan has been submitted to us, we lock you in on that deal in case the borrower goes out and shops to try to find a way around you or to allow the borrower to come to us directly. We believe all of our pricing is extremely competitive. We are very transparent. All of our pricing is going to be put in writing for you, so you know you're going to get something you can rely upon, and we believe our pricing and terms are very competitive. Years of experience. We've been in business for 50 years. This is our 50-year anniversary. I've been the broker for 39, so we are one of the oldest private money lenders in California, and that's a benefit to you because we know what we're doing and we have a track record. Okay, so what are we here today about? We're here to talk about low rate California First Trust deeds. We've found that we have a tremendous amount of cash available with investors who are prepared to put their cash out at lower rates if they can get low loan to value loans. So this is going to be a product that we believe you can compete with non-QM transactions, um, but provide the benefits of a private money loan. So we're offering first trust deeds in California starting at 8.5%. There are some key factors to be able to get that type of rate, but we can get into that a little bit later. For now, I would just want to share some of the benefits of taking a private money loan versus going non-QM or going a paper. First of all is the speed of closing. Our loans will close very quickly on first trust deeds, typically in 7 to 14 business days, probably closer to the 7-day period if it's a first trust deed. Once again, all of our loans are stated income, stated assets. So we're going to look primarily at the collateral in making these decisions. Um, Repeat business. Many loan officers generate significant income through our private money loan program because these are short-term loans. So we're trying to offer a product to a borrower that they can get into now that's going to meet a particular financial need. But typically our loans are written for terms of not more than 3 years, typically with prepayment penalties of not more than 6 months. So it's going to give you the opportunity to get a loan closed where there might be a need for quickness and a need to possibly fix up a few issues with their borrower's qualifications and allow you to get a repeat business down the road. So those are the key elements here. Let's talk about why, again, some more market insights, why low rate California First Trustees are more competitive than they have been in a long time. Largely because a paper and non-QM loan rates are typically in the 6.5. That's my understanding on a paper, even though I don't do that. Non-QM is going to be a bit higher. We understand the Fed's been discussing a reduction in their rates. Maybe we'll get a cut of a half, maybe a cut of a quarter. They're talking about maybe as much as 3/4 of a point by this time in 2026. But despite these cuts, most economic forecasters are indicating that they don't expect any long-term change in the Freddie Mac, Fannie Mae long-term 30-year mortgage rates. They expect that they're going to still hover around 6.5% for the next 2 years. So while we look forward to a reduction in the Fed rate, I don't know if that's going to transfer over into long-term mortgages. And if that happens to be the case, private money at 8.5 isn't a significant difference, particularly if a borrower can't qualify otherwise. This allows us to narrow the gap as to what's currently out there, particularly on conventional loans. I don't offer non-QM loans. I don't know what those rates are, but I'm certain they're higher than long-term conventional rates. So we believe our rates should be competitive enough for the right borrower to have them consider a low-rate private money loan that's going to be easy to qualify for the reasons we talked about before. The no tax returns, stated income, we have no minimum FICO requirements that all play into the quick, easy way to close a private money low rate first trustee. How do you qualify for these? The big thing for us is going to be, first of all, loan to value. If you want this low rate product for us, we have to be below 50% of the as is value of the property. We want to see good pride of ownership in the property. It doesn't need to be perfect or pristine per se, but it should show well. There should be some curb appeal. The inside should show some pride of ownership. We don't have a minimum credit requirement on there, but we don't want to see a lot of mortgage lates. Ideally, no mortgage lates in the last 12 months. But if there's been one mortgage late, maybe even two, we can consider that and not necessarily kick it out of this low rate product. This loan product is going to be made available largely for properties in major metropolitan areas. So we're not going to be able to offer this product for properties that are on dirt roads or in more rural communities. We're looking for areas that are more stable and more predictable when the economics of real estate happen to go up or down. These loans have to also be secured by residential properties, 1 to 4 units, to be able to get this low rate 8.5% private money loan. So what do you need to share with me for me to be able to tell you whether or not your loan qualifies for that rate or a rate close to 8.5%? These are the 4 elements I need. I need the property address, estimated value of the property, if it's being purchased, what the purchase price would be, the amount of the loan being requested, and then I need the purpose of the loan. Most commonly, what my brokers do is they just email me those four elements right there with any loan request, whether it's a low rate loan, low rate first they're looking for, or if it's a second trust deed or anything else. If you were looking for a second, rather than for this particular product, you'd want to include the balance on the existing first. So it's a very simple way to get an answer from me. I typically can get back to you within 1 hour. If I'm out of the office, it might take me two, but I can get back to you quickly so you can get to your clients and share with them the benefits of a low rate California First Trustee. Okay, so let me see if I have any questions. If now's a good time, if you have any questions, to bring that to my attention. The only question I have at the moment is with the down payment. Again, for that low rate, we're likely going to want to see 50% down. We might make an exception from time to time if we see 45% down. Or one thing you can keep in mind, if our loan to value is 50% or less and you get a seller to carry part of that financing, for instance, maybe your buyer can only put 20 to 30% down, but if you can get a seller to carry back 20 to 30%, as long as our loan to value is not more than 50% in most cases, we can consider that. Do you allow owner builder? That's perfectly fine. The key element again is if it's going to be owner occupied, it needs to be taken out in the name of a corporation or an LLC. If it's going to be non-owner occupied, it won't matter one way or the other. Factory built homes are fine. The question came up, homes like boxable? Again, the key element for us is that it is conforming, that it is permanently affixed to the foundation, that it's a conforming residential property. So manufactured housing is perfectly acceptable. I'm trying to think if there's anything else I want to share with you at the moment. Let's see. Somebody's asked me, I'll just go ahead and kind of tell you how my underwrite deals. I have somebody here who's asked me about a small hotel in Colorado looking for a first trustee, cash out 65%, $2 million loan amount. You'll see that we do commercial loans in Colorado. If you look at our state reference sheet, we do commercial, but for a commercial property in Colorado, cash out, my likelihood on a hotel is going to be a maximum of 55%. Are there any other questions before pardon me? Oh, pardon me. I've got an assistant telling me to scroll down. Let's see what else I have. Prepayment penalties. Yes. Typically, our loans have a prepayment penalty for the first 6 months. If you want a loan without a prepayment penalty, all you need to do is ask me for that. Typically, what that means is a slight bump in the rate, or there may be a bump in the fee. We can talk about both options as a means of potentially buying out that particular roadblock that your client may have towards a prepayment penalty. We can also set the loan up with a shorter prepay of say 3 months or a guarantee of 3 months or 4 months. In other words, we're flexible. My most common prepayment period is for the first 6 months only. But if you need something else to meet a borrower's objectives, don't be afraid to ask. We can typically negotiate that one way or the other. All right, any other questions before I call it an afternoon and thank everybody for their generous sharing of their time? Please keep Val-Chris Investments in mind for this. Oh, now get some more questions are popping in here. Pardon me, I don't want to overlook these. Does this have to be a business purpose loan? It has to be a business or investment purpose loan if it's going to be secured by a 1 to 4 unit residential property. But there are a lot of different ways you can meet that criteria. Investment purpose, for instance, if they're pulling cash out to remodel an investment property or upgrade a property, if they're pulling cash out to buy an investment property. Business purposes, there are 1,000 different reasons why money can be used for a business purpose, including buying a new business or starting a new business. If you have any questions or you have something in doubt, pick up the phone and call me and we can discuss it before you put it in writing to determine whether or not it'll meet our particular guidelines, but we are very flexible. Another question I had is, are the guidelines available online? I don't really have the guidelines online per se. The two key elements with all of our loans, whether it's California, whether it's Florida, or any of our other states, are going to be loan to value. Typically, keep in mind for all of our products, not for this particular product, but for all of our products, you want to look at loan to values of 60% or below, and on a case-by-case basis, 65%. And the second condition, when it's secured by a 1 to 4 unit residential property, is the loan purpose. The loan needs to be primarily, that means 51% or more, for a business or investment purpose. And that can include paying off a debt that was used for business or investment purpose. For instance, paying off an existing mortgage that was used for business or investment purposes. Another question I had is, who do you send the quote request to? Whoever your account executive is. So if it happens to be myself, email Chris at Val-Chris. If it's Jeff Lamont, it's Jeff at Val-Chris. If it's somebody else who sent you the invitation, Cecilia or one of our other account executives, send that email request directly to them. It'll get to my desk most likely in a few minutes, and I'll get a chance to review it and get back to you very, very promptly. Are there any loan amount regulations or limitations? There really aren't for the most part, but we do have maximum thresholds and minimums. Most commonly, we don't lend much less than 50,000. For this particular product, I would anticipate our maximum loan is going to be about 3.5 million. Overall, we don't go much over 4. On occasion, we'll go up to $5 million as our maximum loan amount. So if you've got something bigger than that, it's probably not going to work for us. Somebody asked about the age of an LLC or an age of a corporation. I typically want to see that it's been formed at least 3 months before I see that loan submission, because we want to see that it's an actual existing LLC or corporation and that it wasn't formed specifically to work around the requirement of the loan being a business or investment purpose. So look at an existing LLC or corporation for 90 days, and they should have a bank account open also in the name of that LLC or that corporation so that we know that the loan proceeds, if it's a refinance, can go into that particular entity. If it's a purchase, we're going to want to see that the down payment comes directly from that entity, although there are no seasoning requirements. So you could have the funds transferred in from another account the day before you wire to us. Okay, so I think I've answered everybody's questions. I want to thank you all for devoting a period of your time today to allow me to introduce this new loan product. And I hope, should you have any other questions about this low rate loan and any other products we may have, that you'll just drop an email to myself or Jeff or Cecilia or one of our other account executives. We promise to give you great service, and we look forward to working with all of you. Oh, pardon me, one last question. Same rate, owner or non-owner? That was the last question here. Yes, the rate would be the same as long as it meets our loan to value criteria and the other requirements of condition, location. It can be owner or non-owner to obtain that low rate loan. All right. Thank you all. Have a wonderful day. Thank you.